please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Okay, it's looking better. 44 points on the Nifty. The index is at about 10,982. I mean, one positive thing which has happened, of course, is the earnings which have come through in the last hour and a half have been better than what was expected, be it Federal Bank, be it Ashok Leyland. And that doesn't necessarily directly have an impact on what's happening on large cap stocks, but it does have a signaling kind of effect. Will results in those two sectors beat expectations? I mean, that is, I'm talking about banks, especially corporate-focused banks and the auto space. I mean, that remains a question mark, but I mean, the results certainly do help. It's, of course, a reversal in the advanced decline ratio. It was in favor of declines earlier on. Right now, about 1,100 stocks are higher compared to about 900 stocks which are lower. So this is looking better. Midcap Index is also up about 1.4%. At 11 o'clock, 3 hours back, we basically had only 0.7% gains. So gains on the Midcap Index also essentially has doubled from that point on. So with that short comment, let me get in my colleague Sumaira, who is joining in as well. Sumaira, afternoon.
Hi Prashant, good afternoon to you as well, and it's a good day because we're by far the outperformer today. So if you take a look across Asia, it's only the Nikkei which is trending with about 0.5% gains. Rest of the markets are seeing red. The European markets are flat to negative. Dow futures trending with just mild gains at the moment. So all in all, the Indian markets outperforming the pack for the day. Some earnings coming through from Indian metals. Ouch, that's going to hurt. Net profit down over 70%. But first up, a quick look at our top stories. Frontline indices positive, buoyed by gains in ICICI Bank and energy names. The Midcap Index outperforms, shrugging off the gloom of the last 4 days.
Crude oil prices slumped to 3-month lows, boosting prospects for oil marketing companies, aviation companies and paint stocks. HPCL management says oil prices may not be as strong as they have been recently.
The government increases axle load norms for trucks and trailers by 16 to 37%. All India Transporters Welfare Association expects freight rates to fall. SIAM, though, welcomes the move, says it will improve efficiency.
Despite an inline set of earnings in Q1, FMCG giant HUL takes a knock as brokerages downgrade the stock's valuation concerns.
All eyes on IDBI Bank as the board meets to give a nod to the LIC purchase. Also, the PNB stock rises as the government prepares an action plan for revival of the beleaguered bank.
Okay, Ashwini Gujral now joins us. Ashwini, good afternoon. So gains now finally stacking up on the board. What would you do from here?
In the last 10 odd minutes, short covering has picked up, particularly on the financials. My sense is there is more short covering on financials. They had 3 bad days. So Bank Nifty is likely to, close at high point of the day. Maybe another 50-70 points gain could be easily there. We will outperform because crude is our problem. And whenever that is solved a little bit, we tend to rally. So today's short covering can easily, take you past 11,000 also, because the banks have the maximum number of shorts and they are leading this market. Having said that, individual stocks, there's also some play of Federal Bank saying that maybe corporate lending, etc., is getting sorted out. So a lot of things play in. My opinion is Federal Bank has bottomed out. Why? Because after a big bear market, it's had this large move. So that way, I think it could move further. It's a buy with a stop of 80, target of 91. State Bank of India is a buy with a stop of 250, target of 264. And Titan is a buy with a stop of 835, target of 875.
Federal is up 12.5%. PS, any public sector names? I mean, just from a trading perspective, a lot of them are jumping up. Ashwini?
Any of them, because they got crushed. And that is where, inflation tends to impact the most. So with crude falling, I think all of these guys are getting ready for some sort of a trading rally, which could be up to, maybe 5 to 8% also.
Fair enough. I mean, PC Jewelers, look at that, 6.5%, 7% lower. 83, 84 rupees or so. Ashwini, thanks very much. Appreciate you joining in. We will speak in about an hour's time. So public sector banks is where Ashwini is saying one could actually look for trades. Let's quickly put up the best performing public sector banks right now. So if you can look at PNB, these intradays, PNB is up 4.5%. Canara Bank is up about 4.25%. You look at Bank of Baroda, which is up about 5%. These are just three of the names. I mean, actually, Union Bank is the other one. I think Union Bank has got some 7% or so in terms of gains. Bank of India is up about 4.5%. So this seems like a rally which is building and getting stronger. The PSU Bank index itself is up just about 2.5%. Oriental Bank of Commerce is up about 5% or so. So I think I've listed, 7, 8 names. And they usually move with a pack. Could be purely a trading move. Because, I mean, fundamentally, obviously, not very much is different. Stocks got hammered, and now they're moving a little bit on the way higher. But we've got some opinion, Sumaira, now.
That's true, actually. So, Rob Subramaniam of Nomura actually spoke to our colleague, says risk premium in Asian markets is already built in. In fact, he says he's careful now on the Asian and emerging markets and calls trade wars and high oil prices an ugly combination.
Very cautious on Asia right now in terms of the macro outlook in the second half. Trade protectionism gets so much talk, but reality is the Fed and the developed economies, they're normalizing monetary policy. And it's not just Fed rate hikes, it's also quantitative easing is going to end. It's going to turn to quantitative tightening next quarter. Don't forget, Asia's developed a lot of debt. As this normalization happens, it's putting pressure on Asia, and we've seen it. If that's not enough, we now also have China growth slowing, trade protectionism, and pretty high oil prices. It's a pretty ugly combination. Got to really be very careful on Asia EM right now. I think the risk I see is, so far the most hit has been the twin deficit countries, the high yielders. Sure. India, Indonesia, Philippines. I think the risk is it starts to spread more to Northeast Asia next, especially as we get the monetary policy normalisation continuing to go through. I think the risk for Northeast Asia, it's different. It's more credit spreads start to widen, liquidity evaporates, and property markets correct.
Okay, let's slip into a very quick break here. We will come back. Ashok Leyland and Federal Bank reported numbers over the last hour or so. We get you quick reviews. We'll put out some previews for numbers which are due later in the day. Stay tuned. Coming right back.
Hi, welcome back. You're watching Midcap Radar. Well, it's results season. Federal Bank announced numbers just a short while back, and look at this stock. It's now up about, 10, 11 odd %. Largely, it's an inline set. So Abhishek is here to tell us what's in the fine print that's getting the street all excited. Abhishek.
The excitement, Sumaira, is in the slippages. So slippages were at 460 crores, and that compares to about 872 crores in the previous quarter. Largely, the decline in slippages was due to corporate slippages, which were at 207 crore. That compares to about 604 crore in the previous quarter. Another exciting part about this result is the net interest margin. Unlike its peers, wherein we saw for IndusInd Bank and DCB, the margin actually declined quarter on quarter. For Federal Bank, it actually improved 1 basis point to about 3.12%, and they were able to hold on to their margins. So gross NPA ratio remained flat at 3% sequentially. The highlight is that loan growth also was at 24%, which is at a healthy rate when you look at the industry growing at just 12%. The restructured book declined 17.5% sequentially in absolute value, while in percentage wise the restructured book now forms about 1.2%. That compares to about 1.5% in the previous quarter. Valuation and the stock being at 52-week low yesterday, and this result has pushed the stock higher in trade today.
Okay, Abhishek, thanks very much for that. I mean, so Federal is going strong. I mean, you heard Ashwini, by the way, just a while back saying it looks like it's bottomed. Numbers are supporting. And he sees the stock at 91. He says go along with the stop at 80. That is Ashwini's view. 40 points in the Nifty right now. 10,975 is where we're at. That's about 1/3% higher. Midcap index is up 1.4. Small caps have picked up. Bank Nifty itself is up 0.6. Pushed largely, of course, by what's happening to the PSU Bank space, which I alluded to earlier with lots of stocks. The PSU Bank index is up almost 2%, a little over 2% the last I checked. So that's basically the picture at this point in time. The other name just wanted to briefly mention is Jayaprakash Associates. It's had a big vertical fall yesterday. It was down almost 9.5% yesterday. It's up about 4.25 right now, so it's a little bit of recovery. And this is earlier in the morning, the Supreme Court, which heard the matter as far as the JP homeowners are concerned, has essentially is going to continue the hearing tomorrow. The general sense out there is that this is getting close to some sort of a finality. We are tracking that story. So staying with earnings, in terms of previews to watch, the big earnings are going to be from Z Entertainment, one of the big ones. And Sonal is here with the key expectations from Z. Sonal, over to you.
Thanks a lot for that, Prashant. And yes, we're expecting good set of numbers from Z Entertainment, and that's why the stock looks a little excited in trade today. In terms of revenue, we're expecting a growth of around 15%. EBITDA is expected to grow by 30%, leading to a margin expansion of around 350 basis points. All this leading to a profit increase of around 40-odd%. But the main number that we'll be watching out for will be the ad revenue and the subscription revenue growth. Ad revenue growth is expected at around 19 to 20%. And it is expected at those levels because the company has gained a lot of market share in the quarter gone by on a sequential as well as on a YOY basis. In terms of subscription revenue growth, we are expecting it to grow at around 11 to 12% on a YOY basis. If we split the ad revenues, in terms of international ad revenue, we are expecting a growth of around 14 to 15% on a YOY basis. In terms of domestic subscription growth, a growth of around 13 to 15% is expected. However, on the international business subscription front, we are expecting a decline of around 2 to 3 basis. In terms of domestic subscription growth, a growth of around 13 to 15% is expected. However, on the international business subscription front, we're expecting a decline of around 2 to 3%. And management had also told us that they're seeing some sort of demand weakness in Gulf countries. So that is something that we'll be watching out for. Apart from that, we'll be watching out for the management commentary, because back in Q4 FY18, they told us that they'll be maintaining margins at around 30% plus levels. Also, ad revenue is expected to be in double digits, and subscription revenue growth is expected to be in the low teens levels. So management commentaries are the thing that I'll be watching out for today. Back to you.
Right, Sonal, thanks very much for that. Let's take a very quick break, come back in a bit. There's lots more that we need to talk about in the market, lots more stock-specific action. So all of that is lined up next. Stay tuned.
All right, 45 points now, so it's actually building up nicely. 0.4% or so is what the Nifty has got in terms of gains at this point in time. I just wanted to highlight large caps which are holding up nicely. I mean, HP, IOC, BP is a given. I also listed out public sector banks, but apart from these two areas, which is oil and PSU banks, you've got Tata Power, which is up 3%, if you can pull this up. Sun Pharma is up 3%. Hindalco is up about 2 3/4, and Tata Steel is up about 2 3/4% right now. You can throw in a Cipla, Adani Ports, Mahindra & Mahindra. I mean, they're all in the 2% plus kind of category. I can now count almost 10 stocks amongst large caps with over 2% gains. And within those, 2 stocks with over 5% gains, that is Bank of Baroda and HPCL. Well, on the other big story, of course, is the LIC-IDBI deal. Yesterday, LIC gave the approval to put money into IDBI Bank, and today the IDBI Bank board is meeting to give its approval for infusion of funds into itself by LIC. The board meeting is expected to start around 3. Ritu's been tracking this, will track it, will get you details, but she's here with a quick heads up. Ritu.
The board of IDBI Bank will be meeting at 3 p.m. today to approve the acquisition of 51% stake in the bank by Life Insurance Corporation. Remember, LIC is already a shareholder of the bank and owns about 7.98% stake, and it will acquire an additional 43% to take its shareholding to close to 51% stake in the bank, becoming the majority shareholder. Government's shareholding, which is currently at about 85%, will come down to below 50% post the closure of this deal. So also on the agenda is the approval of nominee directors. Remember, the DEA secretary yesterday said that about 4 nominee directors from LIC will be appointed to the IDBI Bank board. That is also something that should be finalized in today's meeting. The other thing would be the turnaround plan itself for IDBI Bank, which has, a gross bad loan of almost 30%, one of the highest NPAs in the industry. So all of these will be on the agenda. It is important to get the bank boards a nod, but even after that, there will be regulatory approvals required from both SEBI and RBI that will be pending to close, what is one of the largest banking deals in recent times.
Ritu, thanks very much for that. Also, crude prices, they're at a 3-month low, something which is a positive actually for a lot of these oil marketing companies. In fact, we spoke with M.K. Surana, the CMD of HPCL earlier this morning, and he says that he has actually pared down his own expectations in terms of an oil price rise compared to just a few months ago, given the kind of factors that have come up recently. Hear him out.
There is some positive news which are coming in, and there is multiple, I should say that, which is helping the sentiments in the market being very hawkish. So one thing is that how the Iran sanctions get implemented, whether it is total, whether it is partial, whether there are ways out to handle that. That's one. Second thing is that the possibilities of the alternate source of supply in the market, like release of strategic reserves from US, then the Libya ports restarting supplies, Russia and Saudi Arabia making the statements that they can put additional oil in the market. So these are all the positive news which helps the sentiments. My view is that once upon a time, some time back, which we were thinking that probably 80 is the norm and 80 plus is the norm, I would try to see it lower than that now. Lower crude prices definitely helps in terms of the fuel which we burn in our refinery. So to that extent helps the GRMs. So lower crude prices is always beneficial for the refining sector. As far as the marketing sector is concerned, a lower ultimate product price, international product price, gives a better leeway to the oil companies to ensure that we are able to align our domestic prices properly to the international domestic prices. And one of the sentiment which the market has, whether the oil companies will be able to pass on the whole of the price impact or not, those type of fears vanishes when the prices are on the lower side.
All right, that's oil view, top story. Telecom Regulatory Authority of India has released recommendations on privacy, security and data ownership of the data in the telecom sector. Ashmit Kumar, my colleague, caught up with Mr. R.S. Sharma, chairman of TRAI, to get a deeper insight in the proposal put forth by TRAI.
I think it is very important that, you see, if I have produced the data, if the data is, kind of created due to my activities, then I have a primary right on the data. Ownership is a concept of a physical world. Let us be very clear that, ownership in a physical sense, if I own a physical object, you can't own it. It's to the exclusion of others. Right. While in a data sense, what can happen is that you can have multiple copies of the data. So this divisibility creates a problem in terms of defining ownership. However, I think the more important term will be who should control the data. As a user, I must have control on my data, and everybody else in the digital ecosystem is a custodian of that data. And therefore, whatever they do with that data should be with my consent, my knowledge. These are very important things. Right. So I think the centrality of the control of the user is the basic premise on which we have begun and we have given this recommendation.
Let me also borrow from some of the recommendations, and this one is seems more of an indictment of the current system that we have, where the TRAI recommendations say that the current framework is clearly not sufficient. Just a word on that. We, of course, we have provisions under the IT Act, etc., but we do not have a comprehensive legislation or comprehensive framework on data security.
No, when we said that the current system is not adequate, that is certainly not an indictment. What we have said merely is that the telecom space and sector of which we are concerned with which we are concerned with, essentially has now new set of players. So, for example, we have very, very extensive licensing conditions of the telecom service providers which essentially govern, notwithstanding the fact that there is no data, overall data protection law in the country. But nevertheless, whatever data, laws relating to data are IT Act and the licensing condition, they are fairly robust, even from the, current standards, I must say. What has happened is that because there are new players, it is, yesterday, the networks were the only intelligent, pipes. The devices, for example, when we had feature phones, they did not collect any data. They were just, passing on, they were enabling me to connect to the network. Today, the new players like devices, smart devices, operating systems, browsers, certain applications, they are the new players in this digital ecosystem who are also collecting the data and actually putting it on the cloud.
Just a quick question here. In terms of how palatable do you think these other digital entities such as applications, browsers will be to a new set of, say, compliance burden and regulations?
Look, it's not a question of that. GDPR has created a framework, right? What we are proposing is not something worse than GDPR or more strict than GDPR. In fact, we have quoted GDPR in a number of places. Therefore, if all these entities can comply with regulator or regulations in Europe, why can't they comply in India? In what way? In fact, to certain extent, India is much, much more important because we are creating much larger amount of data. Today, India is consuming data more than US and China put together. And therefore, the activity level, whether any platform, the number of customers are on many platforms the largest customers. So therefore, why should the data of the Indian customer be treated somewhat differently than the data of the European customers by these entities? No.
And do stay tuned in. Up next is the MF Corner. Firoz Aziz of Anand Rathi Advisors will join in to answer all your mutual fund queries. We'll wrap up on Midcap Radar, but do stay tuned.